let's address the elephant in the room here, which is why are people not selling family income benefit? It's ridiculous. Family income benefit is an incredible policy. It's so good. If you get it and you can give it to your client and you can explain it to your client, they are going to have a much better outcome than anything else. They are one of the easiest policies to sell. They make your business incredibly sticky, and yet we still don't do it. And when you don't do it, by the way, you do run the risk of some smart person, smart ass, not so much smart person, but if I was an advisor or anybody I'm training comes along and they will rip your advice to pieces and rebroke it because you didn't do FIB, because it just shows instant kind of lazy advice, in my opinion. It's crazy. And so today, hopefully in this video, I'm going to show you why that's the case. And hopefully some of you are going to listen and maybe hopefully protect some families and do some good in the world. All right, let's see. So let me talk about this with a story. So I actually remember working with an advisor. I've worked with multiple advisors this happened, but this has happened a few times. But one specific story I remember hearing, which is this specific advisor. And if this is you in regards to you relate to this, then, don't worry. I've had this, but people were doing life insurance. They were selling life insurance to their clients, and they were selling level term life insurance. Level term life insurance at a significantly increased amount to the mortgage. So let's say the mortgage is 300,000. They're giving them like 800 grand life insurance, like really high level term, 800,000. And I remember speaking to them and being like, why do you do that? Why would you, I really couldn't understand it. I was like, I don't really get it. I was like, to be honest with you, it's over-insuring, it's legacy building, it's wealth building. It's really not in the realm of where we're supposed to be without getting too into compliance and things like that. It's a bit of a gray area, so to speak. And also there's a massive argument there of like, you're whacking someone with 800 grand's worth of life, but you're not really doing any IP, any kick, and really any FIB, which is the big one. And their specific answer to this situation, which was kind of the first time I had it happen to me as a client, but it's happened many times since, was that they said, well, actually, I'm doing it because I want to make sure that the family is, if you were to die, the family is left with something, that they're going to have some money left over. And I remember saying, well, what about family income benefit then? Because family income benefit is every single month they get paid an income. And he didn't know that actually existed. And in fact, he was like, I've never really thought about that. I just thought this was the case, I'll sell them life. A family income benefit policy does all the stuff that anyone who's thinking that way, that's what it does. It guarantees that your family are going to get an income if you die for a set amount of time, which can by the way, to which clients who I work with, we take that to retirement as it should, not to the 25th birthday of the kid or the 21st or the 18th, to retirement, because we need income irrespective of whether we have kids or don't have kids or whether they've grown up or not. There is still income needed into that household. So if you're insuring them until retirement for some crazy lump sum, you should be looking at FIB. Now, this specific client made that change and started getting more insurance. Started actually selling a lot more. And they were able to package it around IP and building a better package, which if you haven't checked out my video on the protection package, I actually recommend, you should go and check that one out. But the moral of this story is that if you only know what you know, you only advise on the stuff that you kind of understand, your understanding of it. And if we locked in and if we just sat with, I think I know best, and didn't look at another perspective, then instantly that's going to become a problem. You're going to get stuck. And this advisor luckily didn't, and actually ended up getting way stickier business. So let's talk about family income benefit for a second, and also kind of the whole thing of it, which is family income benefit is a no-brainer. But the way that I talk about family income benefit, how would we sell it, is we talk about it as part of a full income protection package. I call it income insurance. So when I'm working with clients, we say, look, when we say to our clients when we're working, look, we're going to do income insurance. And that means we're going to insure you income if you're alive and income if you die. And you're going to be covered to your retirement age on both sides. That's what we do. We cover them both ways. So we don't actually go too deep into the explanation of what they are. Now, we do to compliance levels, but we don't go into deep explanations of like, this is family income benefit and we don't do that. We actually just go, look, do you want to make sure your income is guaranteed as what it is, which is 60% really roughly of what you earn. And we do the same for the FIB to the IP. So whatever you can get on IP, you do the same for the FIB. That's what you do. And you just make the move so they're going both ways. If you do that, it will sell itself. Now, not only will it sell itself, it's actually the only thing they really need, which comes to another point within this, is that many people are reluctant to sell kind of kick, so fib and IP. They want to do life and kick. But think about this for a second. Just take 1 second to think about it and step back and go, wait a minute. Life and kick is just, not always, but is kind of an older version of a more superior version, which is fib and IP. Because life and kick, I get a lump sum if I die, and I get a lump sum if I get sick. But what happens if I get sick after that? How do I pay my bills? Well, that's not my problem. What happens if we pay off the mortgage? Great. But how do you pay your bills? Again, sorry, not my problem. Well, that's not great. But let's drop down a second. Now let's instead, our client only has fib and IP. That's all the kind of, I hate the word budget because we don't have budget, but that's all it kind of allows. Let's say it only allows that. What happens then? Well, if something critically ill happens, then guess what? IP kicks in. And they're off. And they can heal. And they can get better off the back of that. But let's also say then, and they can go for as long as they want to retirement if they need to. If they get diagnosed with some form of leukemia, like a blood cancer that's very hard to recover from, but it means you might be able to live for a long, long time with that. You can live with it. A friend of mine actually has it and lives and is still alive and is fine. He goes, numbers go up and down. But it's brutal for him to go to work. It's hard. And going to work actually does affect his kind of energy levels and how he works. And so he goes to work, he gets infections, he works in a gym, he gets infections, he has to be off. It's a nightmare. A kick policy would give him a one sum payout and then he'd still be stuck. But an IP policy would allow him that he didn't need to go to work then. It would have allowed him, sadly, and he doesn't have it, and it really does break my heart with this, it would have allowed him to be able to just continue to just focus on being the healthiest version of himself. The healthiest version. And if, by the way, and this is what I like about it, if, by the way, he decided he wanted to retrain in something else, he maybe start his own business on the side, whatever it may be, and build that up and start to replace his income and take back control of his life in a way that would allow him to, within his condition, that's fine too. Because empowerment and doing your own thing is great. But he doesn't need to work. He does need to work for money, and that's the sad thing about it. But he wouldn't have needed to. Kick policy wouldn't have done that. He'd never have anything. But a kick policy wouldn't have done that. Now let's flip the other side. Life policy, same thing. Life insurance pays out. Pay the mortgage off, but guess what? You can't run the bills. You can't pay anything. I know let's take my personal situation with my parents. My mum and dad were very successful, and they had a very large house. We had a 5-bed house, had 6 garages. It was a monster house because we ran a dance school from it. Now my dad was a high earner, and really our entire house was ran off his bills. My mum, however, was a low earner because she had a dance school. There's no money, by the way, spoiler alert, there's no money in dance teaching. So there was no real money in there. My dad's council tax was like £600 a month, something a bit over that, about £600 a month. His electricity bill for that house was like, and this is back then, if it was now, it would have been like £1,000 a month, even more. But it was like £670 a month in like the 90s and 2000s. It was a lot. If my dad had died and my mum's mortgage, our mortgage was cleared, we would have had to sell that house irrespective of whether the mortgage was cleared or not. Would have had to. Because there is no way my mum would have been able to make the money that my dad would have made just because it was just the way it was. It wasn't because it's not male or female. It was just the way the family dynamic was. She had a skill and a skill set of running a business that was from there, which would have made 25 grand a year. Not much, but really, because there's a lot, she would have made it, because a lot of overheads on things like that. That situation would have been well done, we've paid the mortgage off, but now they'd give us 6 months and we would have had to sell the house anyway. Is that a good outcome for your client? Fib, however, which, by the way, we had fib policies on my dad had fib policies throughout the wazoo, like completely. We were insured to the max. That would have kicked in and could have sustained the mortgage, irrespective of whether or not. Now he had life policies on it. He was in insurance. He was this whole thing. So that would have kicked in, and we would have been able to sustain the mortgage as if he was still there. He's not. He wouldn't have been there. That gap would have been impossible to fill, but his financial support would have been there. I would have still been able to go move to London to go and train in performing arts, which obviously now I don't do at all. My sister would have been able to go and train to work in psychology, which is what she does. All of these things could have continued to be funded. My mum would have been able to continue running the dance school, which she wouldn't have been able to do if we just had a life policy. So these are the things you have to look at. A life policy and a critical illness policy is not going to be as good as a family income policy and an income protection policy. It's just not. It just isn't. And I think this is the newer version of it. If you have to pick them, pick that. But you've got to understand that FIB, if you are just not even selling FIB, big thing. Big thing. And it's quite crazy. I have a client of mine, works within MAB, and they had a meeting within his cohort of MAB. They'd sold something like 35 FIB policies that year. 34 of them was him. 34 of the FIB policies was my client, and one of them was somebody else. And I look at that and go, great, my clients are really, really good and they can do it. But I also look at it and go, oh my God, how bad is everybody else? Because we need to wake up and do this. It's bad for our clients. And also, every one of those other people in his team in that cohort, however many people would have been in that room, which by the way is a lot. It's not more like 3, it's like a whole team of people. That would have been crazy, that if he or me, or if I was an advisor now or anybody else, would have gone in and ripped your advice to pieces. Because I'd say, why on earth is someone selling you something that is not going to do the job that you actually need? Hard one to think about, but it's definitely one we should absolutely start to change in the industry.